Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And today we're going to go over all of the trades that we made for Thursday, January 29th, kind of coming to the close here in January. And for those of you who are new members and signed up this week, which a lot of you are, which is fantastic, it is definitely baptism by fire because I know I've had so many questions this week on earnings trades. But the key is, if you don't understand the earnings trades right now, it's okay. We're still going to have a couple weeks of earnings trades to make, but right now we're kind of in the thick of it with a lot of the big name securities that are announcing: Facebook, Google, Apple, Amazon, etc. So if you don't understand the trades, please don't make the trades, or at least paper trade them so you can start to follow. I think that's the biggest thing I can talk about. But again, we go over all of the trades on the nightly videos, so this is a good opportunity to post questions below the lesson page in the trading alerts section of the membership site. Ask questions, let me know. It's best to post questions there because then I can get to the same question for everybody instead of replying back and forth to 20 or 30 emails. So as far as trades go, we did have a bunch of closing trades, closed out of everything that we had yesterday for earnings. So we made 4 earnings trades yesterday, closed out of all of those. Let's start off at the top here with Coach. So Coach actually made a pretty decent move after it opened up today. Our call spread was the one that we were really worried about. At the end of the day, we did decide to close it out at an $87 debit. Took a $7 loss on this pretty much right after the open, but as you'll see, our 39 strike calls were really tested today. So here's a picture of what Coach did. Again, you can see the stock opened much higher, but then earlier in the morning it was rallying towards 40. And again, you know, sometimes we don't know if it's going to rally there and stay there, and it could have turned into a full loser. So we did have an opportunity to close it out as a $7 loss, and we took it. So it was not a bad trade at all. And then we did get that drop in implied volatility that we were looking for. So as far as the IV crush is concerned, we absolutely saw that. The other trade that we got out of, we only got out of one side of this trade, and that was our BABA Iron Condor. So glad that we traded BABA with an Iron Condor. I knew this thing was going to be, you know, really wild one way or another. We were really far out of the money, but BABA made a huge move lower. So we did have to buy back our 96.94 put spread for almost a full loser. It was about 14 cents shy of a full loser. So we did buy back for 186 debit. We're going to let the call side, which is well above the money, go out and expire worthless this week. And we did take a $61 loss on this. Now, again, there's nothing you can do about these other than just playing them risk defined with small positions. But with BABA, you can see, I think the stock was anticipating maybe a $4 or $5 move. It ended up making about an $8 move. So a very big move on the stock. And implied volatility did drop, even though it's not charted here because we don't have enough data to chart it. But implied volatility did drop in those options. And it kind of recovered somewhat during the day, but it was still a very huge move, well below our strikes. So it was prudent for us to get rid of that position quickly. As far as LVS is concerned, LVS was really interesting, kind of, kind of all over the place today as far as pricing goes. It was it opened up much higher last night. If you were on the video tutorial last night that we reviewed the trade, you'll remember that the stock actually was primed last night to open about $4 or $5 higher than where it was today. So it actually moved all over the place today, and I think it actually closed down lower on the day. So it just goes to show you that not all the time is the pre-market trading exactly right on the future direction of the stock. This stock 100% was pre-market trading much higher than it closed today and just completely turned around. Now, we were able to buy back our entire Iron Condor later in the afternoon for a $125 debit. So we took a $64 profit on this trade. Nice little profit on LVS. The stock was pretty much range bound. It was just all over the place today as far as its pricing. And you can see just with the candlesticks here that the stock was really all over the place. It was up, it was down, it was kind of in between. And as a result, implied volatility really hasn't dropped that much. So we actually got a pretty good drop in premium given that implied volatility basically hasn't moved. So we're actually going to look at this trade tomorrow probably for another position, probably a monthly position. If we still see implied volatility very high and option pricing pretty good, then we could add this as a monthly trade because implied volatility just hasn't dropped yet, so it gives us an opportunity to trade it next month. The trade that did work really well today very quickly, it was one of the first trades we closed out of, was our Facebook strangle. So we sold the 83 calls naked and the 69 puts naked. bought those back very quickly after the open for a $10 debit, basically as low as they're going to get for the rest of the week. And we took a nice $76 profit on this one. Now, Facebook was really interesting because this is a stock that actually didn't move a whole lot at all. And usually Facebook is a fairly good mover. It was moving a lot intraday, but actually on the open, it opened pretty much where it closed at yesterday. So it was incredible. And if you got out of it really, really quickly early in the morning, you're able to take a nice profit on it. And you can see that implied volatility drop happened almost immediately in Facebook. And so it was a great opportunity to get out of the trade. So we're going to take that profit and run for sure. All right, as far as new trades are concerned, so we did have 3 new opening orders for earnings trades that are coming up either tonight or tomorrow. The first one is in Amazon, the next one is in Google, and the third one is in CVX. They're all basically the same, all iron condors. Tried to do them as wide as we could possibly do them. So let's actually go over Amazon first because that's the one that's already going to be tested tomorrow. So on Amazon, what we did is we sold the 340, 345 calls, the 275, 270 puts. Now, at the time that Amazon closed today, and let me just go to the trade tab here because we don't need to see the chart. At the time that Amazon closed today, the market was expecting about a $25 move in the stock. So you can see up here in the top right-hand corner here, the market maker move was about $25. So meaning that about 68% of the time as Amazon announces earnings, it moves about $25. Well, after hours, Amazon announced earnings and the stock's trading up to 350, 349. So the stock has made, a $40+ move. So well outside of the expected range. Again, nothing that anybody can predict. Nobody knows this is happening. I don't care who you are. You have no clue it's going to make this kind of move or not make this kind of move, whatever the case is. 68% of the time, it makes a move inside $25. Today, it made a move outside $25. Now, this doesn't mean that the stock can't fall because we looked at LVS last night that was trading much higher. Stock closed lower today. But with Amazon, it's definitely testing the upper boundaries of our call spread. So you can see the call spread is all the way up here. The put spread is very safe, of course, as the stocks move higher. So we're going to leave the put spread alone. And what we'll end up doing tomorrow if Amazon opens up higher and stays up here is we'll end up taking this call spread, this side, and rolling this call spread to the next contract month. So let me actually just show you exactly what that looks like. So we're going to go in here to Amazon. And basically what we're going to do is click on this little blue dot next to the side of it and create a rolling order. Now you've got all these different rolling orders in here, but basically what we're looking for is we're looking for the call side. So you can see the 340, 345 calls. It's going to be this first row in here, and this is how you execute that roll. Now as you load up that order, it's going to automatically default to the very next available contract that Amazon has. Now these are the weeklies in February. So you can see that it's going to default to that next contract. Again, that next contract is just the weeklies in February. We don't want those. So we want to change this when you make that rolling order. We want to change that to the February monthlies, which are February 22 or the February 15. So you can see we're going to change that to the monthly. Right now it's showing a credit of about $43. I doubt we'll get that, probably somewhere around $30, $35 or so. If we execute this roll, then we take Amazon to the next contract month on the call side. So now the question is, what do we do with the put side? Well, we're going to leave the put side just as it is on the bottom side. So the put side on the weeklies, those will expire completely worthless and out of the money tomorrow. And what we're going to do is we're going to re-enter a new put spread above the right below the market to take advantage of where Amazon's trading.